How to analyze an investment property 101. Let's jump in and show you how we help our clients analyze investment opportunities to find out if it's the right fit for their portfolio. So a few things we want to look at as we're analyzing an opportunity. The first one is condition, and that would mean what has to be replaced today, what has to be replaced soon, and what can be put off in the future. The cost of the big things, we have to replace big things sooner or later. Things like the roof, HVAC systems, water heaters, plumbing, electrical. Property was built in 57, so we want to verify with the other agent, was the electrical updated? Plumbing systems, are they poly pipes or have those been updated? Age of the roofs, we can at least see they're disclosing the roof was put on in 2022, and in one of the units, HVAC was replaced in 2022. Four sides brick, I do like this. There is the additional suite, 3 units in total. Second thing we want to look at is what they're disclosing the rental amounts to be in relationship to what they really are. We don't have the actual rent rolls. Typically what you'd want to do when you're inquiring about a rental is you want to ask the other agent, what's the rent roll? What's the rental history? What's the actual collected rents on each of these units? Because that's what we care about, not what it could or should be, and what then can it be if you're able to improve or increase the quality and condition of these units. Seeing one of the units is currently advertised for rent. So right now, this unit is not occupied and it's being managed. So this particular investor, they've got management costs. You may want to manage this yourself, or you may want to live in it yourself when we're not the other side. Ultimately, that's going to be part of our investment analysis. So again, first thing we want to look at is condition. Second thing is the numbers on costs for rent. And then the third thing we want to know is monthly expenses. So as I'm scrolling through photos here, yes, the property was built in 57. This flooring gives that away. Vanities and tile have not been updated, it appears, but good condition. I've seen units like this in this age where you've got the soap holders missing and other damage. Carpet has been replaced at some point since the 50s, but with tenants, you're going to replace carpet all the time. Something else looking through these pictures here, I'm not sure if this is a stain on the floor. Was there a leak at some point? Not sure what that is, but something to keep in mind. And also, as I keep scrolling through photos here, there's something I did note. Here's the HVAC unit in the wall. These are known to not last very long and not really sufficient for long-term use as an HVAC system, being heated and cooled from this unit or not. So again, first thing, condition. Second thing, rental amounts. We're going to take this at face value, and then we're going to compare it to what we know costs are going to be, which would, first off, we want to know what property taxes are going to be. County property appraiser, the tax roll summary, see that our annual taxes right now for this unit is over $3,000 a year. We also want to take into account how much we're going to put down. Cash flow comes from down payments, interest rates, and part of what I'm able to do as a mortgage broker is shop from a network of dozens of lenders, being able to show my clients what's the best of the best opportunity based off certain rate tiers. So right now, putting down 25% based off the purchase price, here's the loan amounts. In real time, we can compare what's really the right deal. So if we want to come in at 7%, we can get a lender credit right now at the 7% rate. You can also see what other lenders are offering right now based off their rate tiers. Pretty solid right now, being in the high 6s, low 7s. So that being said, let's take those numbers, plug them into our handy investment property calculator. We're going to say, okay, our asking price for this property, $479. We're going to come in at list price for all intents and purposes, right? 25% down, expected closing cost amount, expecting to come in with a little bit of repairs, whether it's flooring, maybe it's other items. I'm going to give a marginal repair cost as part of the purchase, all in cash. We're looking at about $150 to make this deal work, right? 7% rate over 30 years, estimating $5 per thousand on insurance, so $200 a month. Our payments are around $3,000 a month, estimating, right? These are not final yet. We need to verify other things like actual insurance, and once you do complete your application, what your rate terms will be. I'm also omitting management fee on this because I'm assuming an investor will likely want to come in and manage it themselves. Unless they have a large portfolio, then you can add a 10% cost of gross rent to this amount. Maintenance, $200 a month, might be a little bit low. For now, I'll go ahead and put this here to allow us some cushion, knowing that we may have to make some improvements over the course of our ownership based off what they have disclosed for rent amounts, right? For $33.50 a month for gross rents estimated, right? Over the course of cash flow purposes, right? Looking at an average of 10 years for holding, principal reduction, and appreciation. The net monthly gain with appreciation is around $1,400 a month. Pretty solid. Now, this is unfortunately not very good because for now, we're looking at all expenses and monthly costs. We got our monthly payments around $3,000 a month with 25% down. We're only making $3,300 gross rent. So gross rent before any other maintenance costs, repairs, it's marginal. 10% without anything else is not very good. So if our cash flow is $155 a month, we are looking at a long-term hold to see any kind of return on this. So as an investor, an average return over 10 years at 14%, it's not very good. I plug these same numbers into another rental property calculator to see, based off of the purchase price, down payment, closing cost amounts, these match the other calculator, but I want to see, does the cap rate match up? Does the cash flow match up? And seeing the initial purchase cap rate being under a 7 cap for putting up that much cash up front, not very good. 9% per year over 10 years invested, and it's not very good. Total profit over 10 years, there's likely going to be better options out there, right? So again, cash flow marginally per month, without even including maintenance costs here. $300 a month. It's a lot of upfront capital required in order to a little bit of return. In order to make this work, we need to see the cap rate on the front ends. Purchase cap rate. We want to see this around 8-9% just because of the risk reward factor involved here. So if we're going to make any adjustments to this, where do we have to be on value? Let's just throw this 425 just for fun and see where the ducks fall after we make these adjustments on purchase price. We're still under an 8 cap. To be realistic on the opportunity here, we need to see a substantial price drop to see this be worth it. I would advise they would pass on this one. We'll keep looking. But this is how you can analyze a property to know, is it worth your time to get involved? Is it an opportunity worth considering? No. Condition, costs, and actual rents in relationship to expected rents. Is it legit? Where can we see any improvement on rent? And are we already hacked out with where the market may be? This one, I think it is. That being said, thanks for watching.